to the record button right there. Okay, so welcome. Very good afternoon to you guys. Good morning to some, especially in South Africa. So today is the 27th of June. My name is Kenny Simon, and we are having the Sunday session, especially covering commodities. We are usually talking about oil predominantly, crude oil, whether it's WTI, WTI or Brent, or even any other factors that would actually come in, including shale oil, if the market is talking about it and there's some sort of volatility created by it, volume created by it. But there are some very important points and alerts as well for you guys on commodities, especially for crude oil, the WTI. And we've got the upcoming OPEC meeting as well. So a lot of you guys are wondering what is going on with oil prices. So I want to start especially with crude oil. And we want to talk about what we are actually expecting in the upcoming week. But we have got something really important to announce because we have the OPEC Plus meeting on Thursday, the 2nd of July. So there is a lot of talks at the moment as of today, especially because today, usually Sunday is a great day to actually talk about oil, because in the Saudi world, it's all up and running. It's their Monday today, so it's full working day. Friday is their Sunday, I think. And basically, this is how they work. And there's a lot of news onto the what do you call that, mainstream media in Dubai, and especially in the Middle East. So they are talking about the OPEC Plus meeting boosting production. So we might actually expect some fall. Now, this is where we want to be very, very careful. Okay, so Thursday is the 2nd of July, and that is when the OPEC Plus will actually talk about boosting production to actually cater to the very, very high demand. We will go back to what we talked about as well last week, on Friday itself, as well as the other webinars that I've actually done, because we've also talked about how in Oklahoma, which was very good last week, I talked about it, and in Cushing, in Oklahoma, in the United States, it's a city. Basically, that's the central area for the delivery of the WTI, and they have already spotted loads of decrease in supply. They don't have enough oil, actually, especially a specific type of oil that is called the domestic sweet oil. It is abbreviated to DSW. So they came up with this report in the city because it's really big, reliant on anything that comes out from the city in Cushing, in Oklahoma. When they are running low or they are having lots of supply and all that, they'll make it very official. And that is basically a very good point to look at what is going on with the price of oil. So that has actually given us a hint that the demand is going to be really, really high. Now, we've also got reasons to believe that because of COVID resurgence, as well as the new variant as well, that is actually going to be another factor, in addition to economies opening up and everything else as well. So we want to marry what is going on there and also the risk event of the OPEC meeting on Thursday, the 2nd of July. So what does that actually mean? That actually means that I think potentially as of tomorrow, we might see a little bit more of a rise of the price of oil, but we don't know that for sure. So we are having a little bit of a risk of not really knowing the exact direction. I mean, the overall trend could actually potentially be still up, but because of the July meeting on the second on this coming Thursday, there may be an announcement that they want to boost production quite a lot. So there is actually a lot more reason on the left side giving us hints that overall trend could actually go up for oil. But then on the short term, at this moment of time, for this next couple of days until July the 2nd, we might not be sure of the exact direction. It may actually go up, come down, and stuff like that. But there is a very big possibility of price falling before 2nd of July, or even on the 2nd. We don't know that yet. It all depends on what the mainstream media is digesting, what kind of news, and forecasting what kind of news from the OPEC meeting before it happens. And that is very important because, you know, there's a lot of gossip in the market and all that, and then the media will turn it around and then will actually impact the sentiments of the market. So in other words, my advice to traders is don't get too excited. Even if you see tomorrow it might actually rise, for example, or even fall a little bit, but I think, you know, it may actually give it a little bit of a rise first. And then just to, you know, cover all the orders and the demands as well from last week, and then it might actually go up. So the going up may not actually be sustained too long because of the OPEC meeting on the 2nd of July. So you just want to be very careful, okay? So we want to be careful not buying and thinking that, okay, it's uptrend and stuff like that. We don't want to talk about trend as yet because the market is still deciding by when to actually continue the uptrend, because the demand is definitely very high. The other thing that has actually motivated the market to actually have a positive or more optimistic view of the price of oil is because the nuclear talk didn't really go through very well, or it's a bit unclear. They didn't come to a deal, the nuclear talk from by Iran, with Iran, sorry. So that side of it is actually, you know, creating a lot of uncertainty at this moment of time. So we might actually see a correction of oil this next couple of days until the 2nd of July, and then maybe fall a little bit more. But then we might see the surge in gold. So gold prices could actually go up. There's a lot of reason for that as well. We are looking at 0.6% for gold already at this moment, upwise, and then they are just waiting. I mean, gold is just waiting for data, and especially NFP data. So if NFP data, I think this coming Friday, so the coming Friday, let's just take a look. You're looking at Friday. Friday is the 2nd of July, so that is basically going to create a lot of volatility in the commodities market. So I am looking at a lot of commodity currencies. What are the commodity currencies? You've got the CAD, especially Canadian dollar, AUD, Australian dollar, NZD, New Zealand dollar, the ZAR as well, actually, to some extent. It's reliant on gold and oil. ZAR is a South African rand. So we want to look at all these pairs as well, because Friday, 2nd of July, you've got the OPEC meeting, OPEC plus meeting, and then you have the NFP. So it is going to stir a lot of things. So we want to take a look as well at the economic calendar in tomorrow's Monday's outlook. So tomorrow's Monday's outlook, I have already looked at a couple of pairs having great patterns, upcoming patterns as well, but I want to look at how price would actually burst out tomorrow from certain key levels. So I will demonstrate that live onto tomorrow's webinar, just to give you an idea of what are the list of instruments we can actually look at. So let's look at US oil in particular, especially on the chart. Now, it is not really wise to talk a lot about the trend and everything else with US oil, because you see, there is a big difference with the word volatility when it comes to trading currencies and volatility when it comes trading oil. Now, when you are trading commodities, let's talk about currencies first. If we're talking about trading currencies, we usually pay a lot of attention to volatility, right? So volatility in the Forex trading world is the lifeblood of Forex trading is volatility. But then in oil, you guys need to understand, oil has got a negative correlation with volatility. So when volatility is expected, market volatility, okay, is expected, especially for crude oil and commodities, is expected to go up, then oil is expected to go down. So right now we are looking at volatility, market volatility for the oil and energy market to actually go up. So that does actually then give us the clue that oil will are most probably going to reverse. So that is also a possibility, mainly because of the OPEC meeting as well. Okay, so volatility, you guys need to understand with oil is a little bit different. We also use a lot of other indicators, tools that we'll talk about as well, like the OVX index, which is a volatility index for the oil and gas industry. We'll talk about that in our separate, I'll make some videos as well with that, because there are some other tools besides just technical analysis that you can actually use to predict both oil and gold. Now, gold has got something called the repurchase agreement. They call it the repo rate. And that is just basically the loan, the amount of rate given to commercial banks, the main banks, to give out loan to the commercial bank. So it's a bank-to-bank kind of loan agreement. So that is usually a correlation, negative correlation with gold. So I want to create a specific video on that, on how we use other tools on the fundamental side of it, especially to actually predict and give us a little bit of a hint so that we know the direction of gold, oil, commodities, and stuff like that. And then you want to marry that up with what we see on the chart. So whatever I've talked about right now is all out of the chart, and then we will look at especially oil and gold as well later on, and look at all these levels. But I want to cover in detail the levels and all that, especially on either Mondays, Wednesdays, and Fridays sessions, okay, in my webinar, so that I can then tell you exactly once markets open, whether or not it has entered selling zone, a buying zone, what are the levels to the left to look at as reversal points, and then we look for patterns as well, and all the steps, and then the trade idea will become a trade signal. Okay, so right now it is more sort of a trade idea, but then it's more like a market outlook for commodities, just to know what has been going on and what would actually impact the market. Okay, so just steady yourself. Don't think of trend, whether you buy, whether you sell, not yet, because we need to do a market analysis first, a trend analysis, then only you make a decision, and then you do all your drawings and everything else onto your chart, and then you plan for your stop loss, take profit entry. Okay, especially your exit is really, really important. Okay, so there you go. So now this is for oil, right? I also want to just revise a little bit as of last week, what have actually happened. We had, I've mentioned as well, I think the Friday session, all the things that has actually gone up, including the NASDAQ, Dow Jones 300 points. We had all the stocks, right? Just going crazy, mainly because of Powell's speech last week, talking about a lot of other things. Not Powell, Biden, actually. He announced the $1 trillion infrastructure spend. So that is now creating all that, upside momentum for the stocks, especially. Then we had a very unexpected announcement of a rate hike. The interest rate went up for Mexico by the Bank of Mexico, and that was what have actually triggered the fall of the dollar as well a little bit. But then it come back up again, and we have also talked about the PCE deflator. This is actually one of the tools. I mean, you've got two tools that would measure and help the US, especially knowing about the inflation situation. Okay, so they use either the CPI, which is the Consumer Price Index that you guys can see on the economic calendar, or there is something called the PCE deflator. It stands for Personal Consumption Indicator. So usually the Consumer Price Index, or the CPI, does not include data from medical, insurance, health, and all that. So that's why they need an extra index called the PCE deflator. So last week, I think as of Friday, when they made the announcement, it was actually quite weak. The PCE deflator didn't give very good data. So that basically has showed a little bit of a non-clarity in the whole of the economy, and also the inflation situation went up a little bit too high and too hot, and that's where we seen a little bit of jump of price of gold. So we want to talk about gold from an angle of technical, but then on Monday tomorrow we want to talk a little bit more on the fundamental side of it, because we've got some announcements coming out as well tomorrow. I think the news will talk a little bit more about gold and stuff like that, because of how the dynamics of the whole situation is going on with oil, with Iran and everything else, because we still have got a lot of fear factor, okay, in the market, in the economies, because they still not resolved about the Iranian talks on nuclear. So because they actually was not clear about the nuclear side of it. The nuclear talk was not very clear, so they sort of paused the talk on the oil production. So that basically means that it's a little bit on a pause to flood the market with Iranian oil. So there is no flood of Iranian oil. So that basically means that there may be more potential for the price of oil to go up, but then we need to wait until after the 2nd of July on Friday to have a nice clear picture of the overall trending of oil for the following week. Okay, so this is where 2nd, 3rd, 4th, 5th. So on the 5th of July onwards, I would think that we've got more clarity on how to trade oil, where to enter, and all that, because they would have already announced it. The reason is because it's a supply and demand thing. So because they have paused the oil talks with Iran because of the nuclear talk, that means that the oil from Iran wouldn't come in. If the oil from Iran comes in as part of the production in helping the demand, that basically means that the supply will go up. If the supply will go up, then the price will go down, you see. So that pause there is further confirming a potential price of rise of the price of oil. But we don't want to be confident now. We just want to be waiting first until what OPEC Plus says on Thursday onwards. So when OPEC Plus is confident and giving all these detailed sort of forecast, especially from the energy minister, it's a Prince Abdul Aziz will be making all this announcement of what he sees, how he sees oil, how far it will go up. He actually is very, very open, and he is talking this openly in Arabic all throughout today and all that, in the Saudi world, in the Middle East and all that. So because you see all these people with the white thing, in the Middle East, they are all connected to the oil barrels that they personally own as well. So you've got a lot of people within the royal family and stuff like that. They are individual investors of barrels of oils as well. They even have barrels of oil in their own palaces. So, and they do, sort of side businesses as well through their own companies. There are very many companies, so they can just ask their assistants with their own sort of vehicles to go and collect oil barrels from their own company to go and supply and sell it to some people in Dubai or in anywhere in the Middle East. So that as well has got a lot of impact because it depends on what they want to do on the personal side as well. So that is what's going on. Actually, really realistically, this goes on all the time in the Middle East world, and not only in the Middle East, various other countries that have got these connections with these people. Especially they are the creme de la creme of the Middle East. But this is what goes on. But us as a trader trading on CFDs, remember we are CFD traders. Okay, so we don't own the oil barrels, shares of any companies and stocks, shares of any companies. We don't because or even physical gold and all that when we're trading on the platform, either MT4, MT5. We're CFD traders. So CFD traders means we are speculators. We just speculate, forecast the prices. We do our technical analysis, a bit of fundamentals as well, and we combine that, and then we just forecast whether it's on the upside or downside, and we trade accordingly. So these are what we are, including myself, everybody else, CFD traders. Okay, very, very different. So what we are concerned of is what are all these things? What are the factors fundamentally, especially with oil? We are talking about at least about 70 to 80% factored by fundamental politics, what goes on in the Middle East, what goes on with Iran, what goes on with the States, US, its shales production as well has actually dropped quite a lot. We've talked about that last week. And they have this very big supply drop on the DSW, which is your, I've mentioned earlier on, the, what do you call that, domestic sweet oil as well for the States itself. So all that is actually listing down very good reason of medium to long term rise of oil prices. Okay, but that is not important for us to just know that, okay, oil will go up. But we need to actually plan our exit as of now, because if you are already buying, I would think that it's probably best as of tomorrow to exit your trades on oil, just to be safe, because as you can see, we have laid out this blue zone. This is for US oil, WTI on the daily chart. Okay, so it closed as of Friday. We see the price there, 73.74. So $73.74. Okay, now it has actually reached right up there at some point here. Okay, 74.006. So we have talked about last week to actually exit at 73.90 because we have actually talked about how oil can actually be traded, entry and exit, especially using psychological numbers. So 74.00 is a psychological number. It has reached there already at 73.99, actually exactly there. So you would have should have already exited at 73.90, 10 pips under, 10 points, $10, sorry, in terms of units, under the 74.00. Okay, so right now, no trades. Okay, right now we just want to wait a little bit because I want to look at, this is the previous buy entry. As you can see, the take profit has already been hit at 73.30. So at the time, I just want to also give you guys a bit of a pointer. When we trade on oil, we need to be quite prepared on the fall, the reversal as well. So if we are trading on oil or any others as well, especially following my style of sharing and strategy, I would not actually talk about entry and exit when the price has already gone into the blue zone. So as you guys can see, I wouldn't be talking about exiting now, or if you're already entering a buy in this zone, we just aim at the end picture, and that is the end of the story. So I have closed my order, and majority of traders, even big traders, they have not actually traded beyond 73.30. Okay, they have just followed this and basically made a lot of money just trading from 71.15 buy entry, and even myself 73.30 exited, and I never look at the extension of it because there were some risk and we were not prepared to take that risk. So we were not actually entering and exit like how you would trade, short term on oil, because oil has got a very different style. That you need to trade oil because it's fundamentally driven. If you are trading Forex and various other ones, you are combining a lot of technicals as well, and your style could actually be scalping and things like that, but not for oil. You see, oil has it's actually a touch and go kind of thing. So that's why mostly big traders as well, even small traders as well, they understand that when you trade oil, you have to leave and go, and you have to have your stop loss for sure. There is no excuse you don't have stop loss for oil. I have not missed a single stop loss for over 10 years if I were to trade oil. Okay, so you just cannot miss out. It's just no. It's a big no to, even no matter how confident you are, and things like that. I mean, for me personally, as a trader, when I trade this oil CFDs like onto this platform, I just am never sure. Actually, I just do the best in terms of price action, patterns, and things like that. But if you compare that to currencies, I've got a higher level of confidence, with the analysis. But with oil, particularly with oil, Brent or WTI, it's just so much factor that is beyond our control. Mainly because one person can say one thing in an OPEC meeting, and everything tumbles, and everything either tumbles or shoots up. You don't know. There were cases where during the OPEC Plus meeting, there was a fight. There was a fight amongst the politicians, and then it was spun. It was all positive and it was all good. They were just talking about a good deal. That was about, I think, 2 years ago, and that fight between I think the people from Dubai or some other parts of Middle East with the Saudi Arabia people, the big people, basically the big boys of the Saudi Arabia, and that suddenly that whole within 3 minutes, the whole positive sentiment turned into negative, just because some people were just about to throw some punches and stuff like that, and then big argument, and then came a lot of other things, just pile up. So we're not only talking about things like this that can happen, but things like this, there are other things outside of OPEC meeting, or maybe a disaster somewhere, touch wood, you've got something just happen. So it's very sensitive on all these things. So it's almost like you don't have control at all. And natural disasters and the big boys, they just have to do things for their own benefit a lot more than the price of gold and currencies and everything else. So this is where you have to be very, very careful. It's very rewarding. You can actually, trade oil really nicely, but inside information, things that I provide for you guys in terms of this blue zone and where exactly and all that. When you're in the blue zone, you just leave and go. That is oil. Okay, we don't trade in between. Usually we don't really. That's why you have to be very prepared for the correction. You cannot trade oil like you trade currencies and gold. When you trade currencies and gold, in between, okay, you can enter, exit, and you can say that you want to re-enter, reopen, but not oil. Oil requires a lot of discipline. Okay, a lot of discipline, and it requires a lot of discipline, and it requires a lot of your focus onto the information outside of the chart. Okay, so that is where I come into the picture to actually guide you, and I monitor a lot of happenings, everything. I use reporters, friends of mine, that literally go onto certain sites and in the Middle East and also in the States, to actually provide me some very nice insiders information as well. So I do read on my own, but I also get a lot of insiders information in terms of oil, because we have very big traders who are trading in minimum 100K right up to 500K, or even a million million plus. So we've got a lot of traders and investors of mine from around the world that actually trade like that, you know. So they trade with the barrels of oil and all their personal businesses, but then they trade this as a side thing, and they never even looked at, you know, the chart. They never probably even downloaded the MT4. I'll be very honest. So we've got a lot of people, they just, you know, come to the webinar. I do some special webinars for them as well, mainly because they are trading oil barrels, physical oil barrels. And this one is just an extra. So when they see the price to enter 71.15, for example, exit 73.30, they just literally use their mobile, and then they do the mobile app trading, depends on which broker they are with, for example, and just enter the price and exit the, and do the TP. That's it. They don't do anything else. They don't open up the chart, stuff like that, because a lot of the traders, they don't actually do all these things. They just don't have the time as well. So they rely a lot on what I have actually researched on, and also tell them in terms of these oil prices, entry and exit. So remember, guys, okay, you cannot trade oil in and out, in and out. You just have to go in and plan the exit and leave it. You cannot go in and out and basically discuss with yourself as well in your mind whether you should go out and in. You just have to, it requires a lot of patience. It requires a lot of trust, okay, in the market, especially, as well as with me and the guidance. So it is actually a very different kettle of fish to trade the oils at, especially Brent and oil. But it's rewarding. It's very rewarding, but it's also a good practice, to let go. You don't need to monitor anything actually with the oil, because it doesn't have that kind of volatility on a daily, because remember, it's all traded on contracts. The real world of trading the barrel is on contract and has expiry dates and everything else. So it's just no point for us to actually go on to the 4-hour chart, let's say, and then, or even a 1 hour, or wherever you want to go, and then look at all these prices and going in and then say, oh, maybe I should exit. No, not for oil. It's just going to stress you out a lot, okay? Because we don't have a daily sort of happenings. As you can see, it's all seasonal. It's got its time. It's got a week. Maybe in 1 month, that is 1 week. Like for example, this week OPEC meeting. So you've got 2-3 days before and 3-4 days after that. You will have that whole week impacting the price of oil with all this happening. And after that, it'll just die down again. And then you will wait for the next event, kind of thing. Okay. So, but at this moment of time, because of Iran talks, nuclear talks, and all that, that's why all this oil thing comes back in. And then now it has to start with the OPEC Plus meeting, deciding what to do with all this production to cut, how to cut systematically, how to balance up all these things, stuff like that. Okay, so very, very different approach. Okay, with oil, I almost don't talk about oil on a daily basis with the traders as well. Majority of the traders, we've got loads of traders, big traders in Africa, especially in Nigeria. We've got a lot in the UK, of course. A group of my friends who used to work in the oil and gas company, they have invested heavily into oil. They do other businesses, run a shop, restaurant, cafe, whatever they're doing. But then, you know, some chunks of their money, they are no longer buying and selling the barrels so much. They are doing that as well, but then they themselves tell me that it's a great investment to actually trade on CFDs. So CFDs trading is very less marketed. All of us hear about Forex trading all the time. Forex, you can trade in the Forex platform MT4, you can trade gold, you can trade this, you can trade that, right? But actually, all these things that we're doing is called CFD trading, contract of difference. Okay, so it's less marketed, and people are not really guiding traders. How do you actually become a very successful CFD trader? So I have been a CFD trader, basically like you guys. You guys can be called a CFD trader as well. But then it's got its own way of trading CFDs, mainly because, like I've just mentioned, oil, when you trade the instrument of oil, it's got a different style. You need to touch and go, and you cannot monitor it because it'll cause you tremendous stress, actually, especially when you start losing oil. Okay, this is the way it is. Gold is a little bit different. Gold, you can still play with that, what's going on in the States and stuff like that, and still have that short, medium term, but not really with oil. Okay, so here, for example, just to polish up a little bit on the patterns as well, let me just, if I, as I've mentioned to you guys as well, I use the pattern only like a dessert at the very end, right? So when we were analyzing it, and then at the very end, we had this ABCD pattern for oil, okay? And that was a very nice one because, let me just make sure you guys can see this. I've shared this, I think, a couple of weeks back as well, just to highlight to you that there was a pattern as well, with oils. Okay, I think I have to adjust this a little bit. Okay, so we can see that there was an area that we needed to exit anyway, based on the pattern, based on it being very close to the area, um, the area of the bullish area, like right there. So we have been in this blue zone already. The ABCD pattern for oil did give us a very nice C point as well, which was at 70.7. Now, 70.7 is one of the Fibonacci ratios and usually gives you the Fibonacci extension at 1.41. Okay, so that's why it went exactly at 1.41 right there. So a lot of us, including myself, have actually exited already and not touched. That's why we've given that TP at 73.30, and that's where we ended the trade for oil because we're still in that bullish area, but then it's almost finishing, you see. So we need to now plan our next move in terms of buying oil only beyond 74.00 or beyond 74.20 and above. So for us at this moment of time, we are monitoring the price of 74.20. We are not buying, we're not selling, not putting any pending order, nothing, zero at this moment of time, because I need to look at what would actually go on tomorrow, whether or not we are looking at any surprises by mainstream media, anything from OPEC plus, we don't know, because 2nd of July, remember, Thursday, this day, we might or most probably before the second experience some price fall for the US oil. Whether or not you want to sell and things like that, no. I mean, for me personally, when we trade oil, we are one direction. You have to be very strict with one direction. There is no like, it's falling, so I can go and sell as well, because it will increase your stress level a lot. Don't trade oil this way, okay? Especially when you trade your CFDs. Even you are a physical trader, oil physical trader as well. You have to trade oil as though you have the barrels. This is the trick in trading oil, okay? Even on CFDs. On CFDs, of course, you don't possess any barrels of oil, but you need to treat the trading style as though you are owning oil barrels, okay? So that actually means that there is no like selling short term and all that kind of thing. We just have to wait. At this moment of time, the direction is only up at this moment of time. Even for me personally, the direction is only up. So what that actually means is that I want to only look at entering and exiting my buy trades only, no sell trades. Okay, so when it corrects itself, I most of the time don't advise, okay, you can go and sell now. Yes, it's good now to sell. As that's why you see I don't actually encourage that, especially for oil. For the others, yes, for gold, even silver, but gold, especially amongst the commodities, gold and all the currencies, we can do that. We've got short term, medium term, long term. It's not that oil you only trade long term. No, you are trading as well short term, but you are one direction. You cannot plan, enter, exit within the blue zone, and then you see it coming down. You want to get out. No, you cannot. With oil, you need a lot of discipline, like I have mentioned. Okay, you need to do that. If not, you cannot get consistency in profiting from oil. This is just the way it is. Okay, we have profited a lot from oil for the past 6-7 years. Me guiding a lot of oil traders, and we're talking about serious oil traders who have barrels, whether they are in Hong Kong, Malaysia as well. A lot of the guys in Malaysia work with Petronas as well before. The people who are having some connections, they are actually literally having storehouses in Kuala Lumpur, other parts of Malaysia, storing physical barrels as well. I mean, it's for us, normally it is illegal to do that, but those who are within the industry have got their own companies as well. They can actually buy and sell some barrels of oil. We're talking about a few hundred barrels, maybe 10 barrels, maybe, but then we're talking about millions. Okay, so there are people doing that. So now they are looking at also extra making money by trading CFDs. But CFDs, my only one rule when I guide them and guide everyone the same way is you cannot go in and out. Okay, there is no going in and out and playing with trading oil like you trade FX and gold. No, it's going to really cause problems. Okay, so you need to ask yourself, when you want to trade oil, are you prepared to trade it and face all this correction? Okay, so as you can see, the initial buy area was quite late, even though inside the blue zone. Okay, I will tell you what I mean. So when we were in the blue zone, and because of the pattern and everything else, our buy started above the 71 area, right? But then I have given hints that I prefer to enter at 71.30 onwards. So from 71.30 onwards, we were trading, and then we just left it. And then 73.30, but some have actually exited because I've given the earlier price. I think it was 72.90. Okay, and we have exited there as well, but some re-entered and then exited at 73.30. But we left the trade open, and basically, yes, there were times of losing a lot as well and all that, but we kept on going, mainly because the probability was very high on fundamental and technical as well. So we have to do this for oil. For oil, it's even more discipline, more patience, and more belief and trust compared to trading gold, so oil is just the way it is, and it has more fundamental factors driving oil a lot more than gold. Okay, gold, actually, you can see, is very much focused on what goes on in the States, mainly, also other things, but then mainly in the States, but not oil. Oil has got anything and everything, especially on the political side of it, games, geopolitical games, and everything else. And we have the Middle East world, we have the UK world because it controls Brent, and you have the US world together with the Latin Americas and also Canada on that side. So you see, you've got huge, big three pillars in controlling oil, but then they control it with geopolitics and politics and economies, but not so much economy, but more geopolitics and politics. Okay, so with that, I just want to give you that advice again. Please don't trade oil in and out, in and out, in and out. If you are ready to trade oil, that actually means you are ready to take the hit of your correction. If you're not ready, don't trade oil that way. Okay, don't trade the in and out thing. Oh, it's correcting now, so can I actually sell? Yes, if it is gold or currencies, but not for oil. It's going to really hurt you a lot. if you do that, because then if you are lucky that the correction is short, okay, well and good. But how are we supposed to know the correction? Because it's so super sensitive with almost anything and everything, especially with somebody saying something in Middle East, and then what if OPEC Plus holds a emergency meeting and then say something, and then boom, goes onto mainstream media, and then it's just totally screwed. Okay, totally screwed, and you get totally screwed bigger time than oil, than gold, and the other instrument. So yeah, that's my advice for you guys. Don't trade in and out. Okay, you can trade your short term, 30 minutes time frame and all that, like very little based on the mother candle, on the 1 hour, 4 hour, that you can do. So you limit the correction, but not to decide in and out and cut your losses. You can cut your losses, of course, or just think that you want to change the direction because it's going down. You're buying because it's going down. Can I actually sell it now? No, don't do that for oil. It's going to be very, very dangerous. Okay. All right. I hope that's clear, because that is just to save you guys from trouble. Okay. And especially with oil, because I can see that oil will be good for us to trade right now. It's good to look at what happens beyond 74.00, especially UK oil. Now, for Brent is also mirroring the WTI at this moment of time. So yes, we are expecting a lot of UK oil prices surge as well. But the good thing about Brent is that you guys can see, right? Brent is like silver, okay? Gold and oil is like the same. I'm not saying that they are correlated. They're not, correlated directly like that. But I'm just saying that the way Brent, WTI, and WTI and Brent moves is like the pair of gold and silver. Silver is always behind gold, okay? Brent is always behind WTI, all right? But it's in the same direction. So for those of you guys who trade the Brent as well, UK oil, it's a good thing actually to have. If you are prepared, number one, you need to be prepared to trade oil the way that I have said to you. If you are prepared to trade oil the way I've mentioned earlier on, not to go in and out and all that, just one-way traffic, and then you leave it, and then you prepare to take that risk, short, small risk, or big, whatever the risk that you are prepared to take, then you go for it. And if you go for it that way, you can trade both Brent and WTI, because here, for example, you see the UK oil. We've given this tip right here, this trade signal. I think I have also entered personally this trade here for UK oil. It was buying at 74.10, right? So right now, I think it's quite close. Let me just see where it is right now. Let me just check. Okay, UK oil. It closed at 75, right? 75, above 75, so 75.24, let's say. Okay, now you see how it has already increased your pot, yeah, your profit. So if this is the way you trade oil, where you leave and go, you will actually see a lot of potential and a lot of profit from gaining. But if you if you go into oil trading and you want to monitor it, it's going to cause you a lot of stress. That's it. I don't monitor the oil. I actually monitor oil or any other thing just for you guys, because you guys are actually monitoring it every minute of the day. You see, so it's not necessary. It's not necessary to keep monitoring it, because you monitoring it and thinking that that is a trend, okay, it's going up now, okay, I'm going to open a second trade. Or if not, you say it's going up and you get really excited, and then it suddenly start to come down and you say, okay, the trend is down. No, it doesn't work like that. Okay, so the trend overall is on the upside for both UK oil and US oil. WTI and Brent is on the upside, but we have a bit of correction to expect, especially for US oil, because of the 2nd of July, Thursday, and also a lot of politics going on at the moment. Okay, That is number one. And I have to also research the current resurgence of the COVID in the US as well, and various other places, and also what is the travel situation. Travel situation for business people is different from travel situation for the medical supplies, very different. Okay, so there is all these things to consider, and these things does actually impact the price of oil. Okay, so now we are looking at 75.40 as your TP1. It has already gone to 75.24, and it's a good thing. So it's not far away from your first TP of 75.40. Okay, so that's good. Now, that's your TP1. So if you have left that and not touch it at all, you are already in profit because you have traded and entered, as we have discussed a couple of weeks ago. I think this is 74.10 and then 75.40. Your TP2 is far, far away. Okay, so let's forget about TP2 for now. We just want to look at how best your TP1 is reached, and then we plan ahead on a re-entry, and maybe we might change the TP2 to be a bit lower as well, all depending on the trend. Now, on the daily chart, as you can see, candle and everything else, this is UK oil we're talking about. Okay, it is looking quite good. It's just that it's trading at 75.29. Now 75.40 is where you have to exit no matter what. If you are actually already buying, thinking of buying, you can enter at any time, because why? You are already in the blue zone. Okay, so but whatever you do when you are buying, there's no selling here. Okay, there is no, it's just one way direction. As I've mentioned to you, I am more interested in the buying, not the selling at all. Whether or not it's correcting or doing all kind of stuff and showing you how great it is, the bearish candle is, I am not entering for the sell. It's only buy. This is a one-way traffic for oil. Okay, especially commodities. This is the best way to actually trade it. So 75.40, you need to exit no matter what you do. And then we look at 76.10 as a potential entry, depending on what we talk about tomorrow. Okay, so when we go on to the weekly outlook tomorrow, I'll be able to give you guys more ideas on trade signals, not trade ideas. Trade ideas are just the whole idea of it, planning stage. Trade signal is when I myself will trade it and on live market, and putting it upon pending order and having detailed entry price, exit price. Stop loss has to be your own. The stop loss has to be mine personally as well, depending on my equity. So you have to, but it's a must. Okay, especially trading commodities, it's a must, total must in stop loss, because if not, you will see that it will actually really bite you from the back if you don't have stop loss, especially for oil trading. Okay, this is really dangerous, because all the people who are trading in big amounts as well, they all have SL all the time. And yes, they have hit SL as well and all that, but overall, it's going to be very good for you, because we are trading with high probability areas and zone. So the stop losses are measured based on your risk appetite. Is measured. So that actually means that there is a potential or a probability for you to cover your stop losses because you are in a high probability trading area or trading zone. Okay. All right. So that's your UK oil. Okay. So a bit of an idea there just for your UK oil. Your US oil, you guys already know roughly nothing to do at this moment of time. I want to monitor tomorrow onwards, and then we come up with trade signal. Now no trade signal, nothing, just rest first for the US oil. UK oil, you have the potential. Let's look at what happens tomorrow as well, but then whatever you do, you exit at 75.40. Okay, 75.40, you need to get out, and then we'll talk about more trade ideas and signals from tomorrow onwards on UK oil, because I see that UK oil might give us some entries and exits tomorrow onwards. You have to plan your SL yourself, but there may be some trade signals tomorrow onwards. I'm just looking at some prices that it needs to hit as well. And I want to look at some fundamentals in the UK side of it with Brent, okay? And then we can plan some entries for the whole week for UK oil. US oil, maybe we've got to wait and pause a little bit because we don't want to take the risk. I don't want to go into selling of the US oil at this moment because it can also be very risky because I don't know the extension of the sell and I don't know the shoot up as well. So it's not really a nice point to think about US oil for now. We maybe need another couple of days. Let's see first. But UK oil, we may have some nice entries as well. We'll discuss that tomorrow. Okay. Now let's talk about gold. So gold, basically, as I've mentioned, because of all the US data and things like that, it might actually give us some hint of a shoot up in price. Now, you guys can see, right? It is not, the price has closed at 1781 for gold as of Friday. So you can see that you've got a bit of a sideway here. We're looking at the daily chart. It is not inside the blue zone, but if it shoots up because of any fear, volatility, how you call that, the fear index and various other uncertainties in the market driving fear up, uncertainty, even with the US, Iran politics or any other things like that, then we might see safe havens interest coming in. At the moment, no safe haven interest yet, because as of last week, as you guys know, we have covered that the market was on a risk on. People were taking the risk, not having risk taken out or not being careful. They were all very greedy last week with the stocks and everything else. So it was a risk on environment. So whether or not that risk on will become risk off, it depends on what goes on in the market in terms of risk events, whether or not we have any especially geopolitical or political or even economic data type thing from the US especially, that will then drive gold to shoot up. If it does actually shoot up, what I see happening is that you have got two areas here, right? We have got two mother candles to look at or to refer to. We have got this one here, okay, right? And we also have this one here, okay? These are price surges or price rise based on a single mother candle, a single bullish mother candle, okay? One which actually happened this year itself in May, just recently, and the other one happened also this year in February. This is a good sign because it's not so far back. So we've got a good point of reference, which basically means that if it actually rises, it needs to rise. If you guys are looking at buying, okay, of gold, the blue zone is not now. The blue zone hasn't happened. I mean, yet the price has not entered the blue zone. It only will enter the buying or the blue zone at 1791.60 and above. Okay, so what does that mean? That means that we may see a potential to buy gold at 1791.60 and above. This is where you can actually choose the price you want. It's inside the blue zone. So I would say choose 1792 just to make it round numbers. 1792 onwards, pending order buy, and I want to limit my buy and not follow this longer candle here, but follow a shorter candle right here, right? And that would be at 18. Let's say I don't want to go up to the 1808.52. I want to make it really clean. 1800. So 1800. I exit. Okay, so that's where I would see, but not immediately tomorrow. I will look at fundamentals as well. We'll discuss that tomorrow in the Monday session, whether they are fundamental fuel from the US. Basically means that whether or not the US side of it with regards to inflation, economy and all that, whether it's bearish. If it's got some fuel of bearishness, then I see that the price goes up for gold and it enters into the blue zone, I want to look at that single candle as well, how strong it is on the daily, weekly, and monthly in terms of the mother candle. Is it a strong, nice candle with no wick? All that we will monitor live tomorrow together, okay? If it does actually enter, then 1792 is my entry price, my exit price. All these are pending. I'm telling you the pending that I would do. 1800 to actually exit. Okay, so that's basically it for gold, okay, at this moment of time. So that is the possibility that we can actually see. Even for gold, I don't actually go in between and monitor it and enter and exit. I just go one way. So mainly because it has already, if it has gone inside the blue zone, you can leave and go. You should, and then plan your stop loss. But if not, if you are here, let's say tomorrow it is still here, hasn't entered, yes, then you can do your entry, exit, like how you want to have a bit of a short term and you see it going down, you want to sell, and you want to go up as well, no problem. You can do anti-trend and all that. But usually if it enters a blue zone, whether it is a red selling zone or a buying zone, then we just follow one way and we just leave it, leave the trade on your plan SL, on your plan entry, on your plan take profit. And we don't touch it. We don't go in and out and disturb the whole process of it because it's already in a high probability type zone. If not, you will see yourself getting stressed for no reason and then going in and out of um, of the blue zone yourself. You have exited the high probability zone yourself because you are trading in your own way. All right, you can trade in your own way when it comes outside of the selling or the buying zone. Then you can trade however you want. But here inside, you plan the exact entry and exit. And in other words, I'll be very blunt and honest, you have to leave it to hit your SL. Are you prepared to do that? We don't know, right? So, but this is how it is. When we are trading in the high probability zone, we are trading in the high probability zone. And we can find that, yes, there are times we hit the SL, but it's very much less the number of times you hit your SL in the blue zone. You will hit it. There might be, there's no avoidance of not hitting SL at all in the blue or the red zone, but it's far less, meaning once or twice, okay? Depending as well, your distance, because usually in the blue zone, our distance of take profit as well can be multiple, right? TP1, TP2, TP3 and all that. But you can see that it's one after another that we enter. We don't actually, enter in the middle of entering for TP1. We do our own stuff. No, we don't do that. Okay, so we have TP1, TP2, TP3. You finish your TP1, it goes up again, then we aim it at TP2. That's it. As easy as that. All right, not easy to control your mind especially, but I know it's a challenge, but it's worth the practice. This is how you strengthen your fiber of focus, patience, and discipline. That's the only way, is to deal with it. To go over it is by going through it. Okay. All right. Any questions at all, guys? Any questions? You guys okay so far? All good? We've covered a lot on oil and gold. Okay. We'll be covering currencies and all others, trade ideas wise, tomorrow on our Monday's market outlook. Sorry, guys. Okay. Any questions? All good. Shall we end the session for today and have you guys enjoy the rest of your Sunday? Any questions, guys? All good? All right. Looks like no questions. If no questions, okay. All right, good. Thank you so much, guys. Okay, so if there are no questions from the rest, then we will end the session for today. Let you guys enjoy the rest of your Sunday, and we will be meeting again tomorrow in our Monday's market outlook. So I foresee a very interesting, volatile market driven by a lot of fundamentals, especially with the oil and commodity currencies as well, impacting oil and commodity currencies. So I see it I would think a reasonably nice trading week if we plan ahead and we have the right prices and your right placement of your stop losses according to your own personal appetite, risk appetite. And I think we can do that. So with that, I would like to thank you guys for your time and enjoy the rest of your Sunday and have a great week ahead. And see you tomorrow. See you guys tomorrow for more trade ideas as well as trade signals. I've got some waiting for you guys as well. I'm just doing the whole analysis as we speak right now, and we'll have that presented to you guys tomorrow. Okay, guys, with that, thank you once again. Enjoy your day and have a good one. Take care, guys. Yeah, thank you. Bye-bye.